What's good, guys? What's good, guys? Hope you guys are good. Um, Today I'm back with another one. So, what I want to share today, guys, it's a very important thing, right? Let me just remove everything. So, yeah, guys. So, what I want to share today, guys, is you remember on my previous video I talked about the vertical line that you can use uh, each and every beginning of the week, right? For instance, if this was Friday, then this is a Monday, right? So you place your line on the period separators, right? On those period separators, right? So what I want to share today is how you can predict how the entire week can go, right? How the entire week can go, and how you can uh, use a specific I wouldn't say specific days, but something like that, right? On specific days you look for something, right? Not on a Monday, not on a Tuesday. Like start on a Tuesday, then Wednesday, Thursday you are expected to be on a trade already, right? So this is just a very important hack I'm about to share with you guys. So what I'll do, let's just mark our vertical lines for maybe this is, you see these are 5 days, 1 2 3 4 5. So this is an entire week, so let's maybe do um 3 months, so it's gonna be for 8 12 for 12 weeks, right? So that we can get this thing um so that you guys can understand this thing properly, right? So that you guys can understand this thing properly, let's just mark, put our vertical lines. These vertical lines, they help you to see clearly how the markets can possibly move, right? What the market has done on that week, right? So you are not just because at the end of the day you have to predict how the week can go, right? So this is 1 2 3 4 5. Okay, it's only five. It's only five. Then 5 6. Let me continue. 6 7 8 9 10. 1 2 3 4 5 6 7 8 9 10. So we have 10 weeks here. So let's add some, like 2 weeks. So one left now. Then we are sitting on 12, right? So this is entire 3 months, right? This is an entire 3 months. So let's see. So what I want to share here is something that you can use in order to predict, on a specific days how the market is going to move, how the entire week can play out, right? So when we are starting here, the week that we're gonna use, it's the previous one, right? So don't mind this, we're not gonna do anything about this week. So during this week the markets, if we see, it's consolidated. So what I want you to do is each and every beginning of the week, see the entire week how it played out, right? Was it bullish or bearish, right? In this case we had a consolidating week, right? It did went up, then came back down, then close here, right? Near the open. So it's a consolidating week, right? So the following week you don't do anything if you have the consolidated week, right? You need something to be very clear, right? So on this week right here, we went up, the markets went down, then came back, closed above the open, right? It's above. It means this candlestick, this entire candlestick is bullish on a weekly time frame, right? We have a bullish candlestick. This right here is a wick, right? So now we have a candlestick that is telling us that it is bullish. So what I want to share is, once you know that the candlestick is bullish, you have to expect the coming week to be bullish as well, right? To be bullish as well, right? So what you're gonna do is you're gonna mark the lowest point. You're gonna mark the lowest point. This is like your playground, right? You're gonna mark the lowest point, then mark the highest point, right? This is your playground. It's the high of the previous week, it's the low of the previous week. You are on this week, it's a Monday, you just placed your vertical line, right? After that, leave the Monday, let it play out. Leave the Tuesday, let it play out. Where you are most interested, it's the Wednesday, right? What is the Wednesday doing, right? So what I want to show you is the Wednesday is testing this area right here. It's testing this area right here. Here's what you're gonna do. When you see this on Wednesday, it's a Wednesday, it's almost this is South African time, so it's almost New York open, right? So what you're gonna do, if you see this, it means the low of this day has been created during New York session. It's a possible low, right? It's a possible low, right? So what you're gonna do is you're gonna see an engulfing. You may use any strategy of your choice, of course. I should keep on using the wrong thing here because I'm used to another laptop, right? So this one I'm just recording on it, right? So this is what you're gonna do. First, you're gonna look at the previous week. If the week was bullish like this one, then you're gonna assume that the following week will be bullish again. What you then do is you wait for Wednesday to see how the market is behaving on Wednesday, right? On Wednesday, the market went down, it's open, the London dropped the price, then we're here at the support area. So if you are looking at the market structure right now, you can see that we broke this, then we are in a bullish market, we just broke this, we were on a bearish market. Now you are looking for a bullish market to be formed, right? You're looking for another bullish market to be formed. But before it can be formed, you can play it safe and don't take this entry. You can take it after we've broken this, right? After we've broken this high right here, right, then you can start taking your entries. But it's also possible to take it where it turns, right? So what you then do is you place your buy. When you see your entry trigger, you place a buy. I used an engulfing candle as an example here. Then the market went up a bit, then came back down, it took us out, right? It is what it is, right? You move on to another entry. This is a very, very important trick that you're gonna use, guys. I'm providing you with a very important trick. So if you look at this candlestick, it's a railroad pattern, this one, right? So you take this entry again, it's the long position. You take this entry again, you place your stop loss one candlestick below, right? Then you place your take profit above, right? You place your take profit above. So if you get a 1:3 above these highs, possibly at these highs you can take a profit. But what you are anticipating also is that for this to be taken out, because this week went down, so it means it's a consolidated week. This week has to be taken out, right? So you are up almost 3% on this entry, right? Yeah, it's almost 3%, or if you put this close, it was 3%. You can close. It means you have taken a loss here because the market went up a bit, then came back to take you out. Then it created another confirmation. You took this, you made a 3%, so you're up 2% because you took a loss, then you took a win of 1:3, right? But you are not stopping there. This is a continuation, because now you know this has to be above this. You wait for the market. The market on this week, it went down, right? It went down. It's a Monday. Remember, you place your vertical lines on Monday. It's a Monday. You are anticipating the market to buy still, to break these highs. It went down on a Monday. It went down on a Tuesday. Then it created something you can call a weekly low, right? We can call this a weekly low, right? On Wednesday, look at how the market was behaving. Remember, you have a specific direction that you are looking for, which is a buying market. Let's see how the market went about, right? It broke this high, came back. So there are two ways you can go about this, right? After this engulfing candle, you could have entered. Then I'm gonna show you another way, right? After this engulfing candle, after we've broken this, then the market came back down. You could have taken your entry like this, right? You could have taken your entry like this and place your stop loss below the candlestick, right? Below the candlestick. Then your take profit must be higher than this point. The reason why we took our profits here, it's because it's expected on the following week that the markets may retrace, then go back up, right? So that's why it is wise to take your profits here first, right? So but on this week, the market has already created a low, so there is no way it can still go further down, right? It is possible, but trusting your strategy that you have tested, you know that there's no way. I've tested this, right? Then you take your profits above this high, right? When you took an entry on this engulfing candle, you see this engulfing candle, it happened during New York. Yes, it happened during New York session, right? So you held this for like 2 days, right? Not even the entire 2 days, right? You held this entry, you made a 1:5. You see how beautiful this thing is, right? Then this has like this entry has been completed. We are done, right? Then this week closed here, right? So now we have a consolidating week again, so we do nothing again, right? Remember, when the week is consolidating, we do nothing. We wait for a clear market, right? Let's wait. Then on Monday the market went up until we had a close here on Friday. Then now we have a bullish market. When we have a bullish market, we are expecting the market to be bullish on the upcoming week, right? So that's exactly what we're going to look for. On Wednesday, I'm giving you a specific date here. I'm giving you a specific date. Look at this. On Monday the market came down. On Tuesday it came down. It resisted on this area. It did a double bottom. It went up. It came down on Wednesday. So this is where you take your entry. You take your entry. You place your you take profits above the highs, right? So there's so many ways you can go about this, right? There's so many ways, because you can head over to a lower time frame and look for any potential entry, or you can take your entries around the CP. It's up to you, right? It's continuation pattern, right? So it's up to you. You do what you know, right? You do what you know. If you are saying this is a demand, there's so many ways you can take this entry, right? If you are saying this is a demand zone, then you could have taken this entry right here, place your stop loss below here. If you were saying this is your support area, then the same thing would have happened, right? So here we had a little bit of 1:2, I think, because of the entry trigger there. I entered on, we made 1,888 percent, right? So we are up by 1,88%. So imagine if you are taking this as a zone, right? Imagine if you are taking this as a support, or yes, like this, right? So you were able to cash more than 3,5 risk to reward, right? More than 3,5 risk to reward. So I'm thinking you are risking 1%. I'm assuming you are risking 1%. That's why I'm saying you could have made 3%, 1%. So if you are risking the amount of let's say $1,000, you could have made $3,500, right? That's a lot, guys. So let's continue. Now on this day we are done. You take this entry one, it only appears once in a week, right? The following week you wait, see the market, how it's doing, right? Then the market went down, it came back down here, right? So now when you look at the open and the close, we have a bearish candle, right? We have a bearish candle. When we have a bearish candle, what we are looking for, we are looking for this week, the upcoming week, to be bearish, right? So what you're gonna do on Wednesday again, guys, this is magic, guys. This is magic. You're gonna thank me for this. On Wednesday, you look at where the market is, right? Look at this. It's Wednesday, right? It's Wednesday. We had an engulfing candle here. We had an engulfing candle during New York, right? So let's say you took your entry right at this point after this engulfing candle, right? You took your entry there because we are at a resistance area, right? You take it, then you place, remember where is it gonna be, you take profits below this low because you are predicting a bearish weekly candlestick, right? If it doesn't hit your take profit this week, you're gonna take it the following week, right? You're gonna continue the following week. Look at what happened, guys. Look at what happened, right? Boom, a nice 1 is to 12 RR, right? A nice 1 is to 12 RR. Let's continue, guys. This is amazing stuff. So if we had a bearish candlestick on this week we are expecting the same thing, right? So let's see. This is Monday, Tuesday, Wednesday, right? Then on Wednesday, that's what we are paying attention to. On Wednesday, you look at Wednesday. Did the market do anything here around this area? Because we're expecting a bearish candlestick, right? It didn't, right? It did not do anything, right? Except for this bearish candle here, but it was nothing we can take, right? So you have no entry here. Then you are expecting the market to continue to go below here or stop at this area. So on the upcoming week, you ask yourself, what candlestick do you have? We had a bullish candlestick, so we are expecting this to be bullish. So you go ahead, mark your support and resistance, your playground, right? Then let's wait what we're gonna see here, right? Let's wait on what we can see here, right? So Monday, Tuesday, Wednesday, right? This was Wednesday. So you can see on Wednesday we had nothing, right? We had nothing on Wednesday, but you can still get an entry, right? We had nothing on Wednesday because we were selling. This is another way you can go about it, but I really think it's gonna be wise for you to first start with the one I was showing you, right? Not the one where Wednesday it's in the middle of somewhere. You are predicting it to go to your preferred support and resistance, right? Or your desired support and resistance. For instance, even here, I just didn't share this, right? Even here you could have taken this entry when we're breaking this high, because you know Wednesday is coming to this point right here, right? So let's not talk about that for now. Let's just simply talk about if the market was bullish, we are waiting for a bullish market, right? So on Wednesday there was nothing, but on Thursday the market did a double bottom, right? So after this engulfing candle, right, remember we have specific days that we look for this, and it's Wednesday and Thursday. Even on Tuesday you can see where the market was, then on Wednesday you can take your entry, right? So here you are allowed to take your entry on Thursday, right? Let's say we took this entry at this point, we place our stop loss here. Then where are we expecting our take profit to be? Above here, because we are expecting to be bullish. But since we have a new week, we are expecting the market to go down first before going up, so we can take our take profit. This is almost a 1:3, right? Over 1 it's over 2.5%, right? It's over 2.5 risk to reward, so you can take it, right? Then wait for this week to tell you what it's gonna do, right? Now we have a different scenario. This week was bearish. So you're no longer gonna force the markets to go up. Now you have a bearish week. What you should look for, it's Wednesday and sell the markets, right? This is what we did. Our playgrounds. Then on Wednesday, where were we? We were here at a resistance. Look at how beautiful this entry trigger is, right? Look at how beautiful this entry trigger is. I keep on doing the wrong thing here. Okay, this is your stop loss. Then your take profit must be below this, right? If it's still within the same week, right? Look at this, 3,5 risk to reward was made, right? You continue, you are done with this week, right? This week was bearish, right? So you wait and see. So on Wednesday we had nothing, right? The markets just sold, so you have no entry, right? Still you wait. This week the market was that was bearish, so we are expecting this week to be bearish again, right? So again here you had no clear sell, right? Just because the market consolidated here. If you know what you are doing and you are good with market structure, you could have sold here, right? You could have sold because you are expecting the market to sell on this week, right? So you could have sold and maybe caught more than 6%, right? But since we are using these example that I'm talking about, we wanted the market to go at least up here before going down, so it didn't. It's just consolidated after the break. It went down, right? So let's continue. Now we had a bearish market, right? This is a bearish market. What are we expecting? We're expecting this week to be bearish also, right? Let's see on Wednesday what the market did. Look at this, look at this. You have this, right? You have this, then you have this. So on it, this is a double, this is a double top, right? So on Wednesday you had this bullish and bearish engulfing, right? You had this bearish engulfing as your entry trigger, right? So you took it on the bearish engulfing. Then where are you expecting your take profit to be? Below this, right? Below this. But if the wick close here without breaking it, you take your profits, because this wick can be consolidating, right? You don't know that, right? Or it can change and go up, right? So you could have caught a 1:5 risk to reward, right? So look at this, how many entries we got. So let's just count in a month how many entries we got. Let's go back in a single month, right, to see if you can pass your challenge using this strategy I was just sharing here. So this is, it's Jan. Okay, this is Feb. So this is Feb. We had nothing here. Then here we had a 2% win, right? Because we had this loss, then we took this win, so we had a 2% win. Then here we had a 5% win. So in a month now we are up by 2 plus 5, that's 7. Then we continued, it's the same month, it's February. Then we continued on at the beginning of March. Okay, we are done February. We could have made 7%, risking 1%. So you can get an extension if you are on a if you are doing any challenge, right? Or you could have squeezed this and make 6% finish your challenge, right? It's up to you. Maybe you could have entered multiple position, maybe you could have risked 1.5%. It's up to you, right? Let's continue with another month. Now we are on March. Then on March we made 3.5%. Then here we made 12%. So 3 plus 12, that's 3 plus 12, that's 15, right? 15% in March, right? You're already up 15%. This is a swing trading strategy. You can also call it an intraday, because sometimes you don't hold your entries that long, right? Then we're in March. This was March, right? This is still March. So it's, you have like 15 plus 2, that's 17, so you are more than 17% above, right? That's just on March, so you were really doing well on March. Then again in March you did 17 plus. This is more than 20%, guys, in a single month. Not something difficult, not something difficult, right? Then then we are on April, so we made 20% here. On March, on Jan, we, it was it's Feb. We on Feb, in Feb, I mean in February we made 7%. In March we made 20%. So you are really doing well on your challenges here. Then in April now, right? In April, uh, you're just getting started. You're up by 5%. Imagine this: if you are risking, just because you are a swing trade, you can risk 2%, so you're up by 10%. With a single entry you are done with your challenge. This is the secret, guys. Beauty of the beast, guys. I hope this video was productive. You were able to grasp a thing or two. Peace and love. Beauty of the beast.